Now, let's hear more from Gunjan Banerjee, a contributor for CNBC. She is the principal writer for the live market section of the Wall Street Journal. It's wonderful to have you here. You've written a lot this year about Tesla, and the boom in options have been just wonderful. But there has been a noticeable increase in the role of the average investor in this build-up. Melissa, is that not the case? And what a wild ride this stock has had. As you mentioned, about 70%. During this run, we've observed that individual stock investors have increased their holdings. The most well-liked purchase for individual investors is by far this one. As of this year, single-day stock purchases touched a record, according to some Van Dyke research statistics. As a result, as Tesla experienced one of its worst years ever, you saw people declare, "Hey, I'm going to double down." The fear of losing money is something that investors frequently have to deal with. Experts advise investors to always conduct research on any company before buying shares and to never invest money they cannot afford to lose. This is true, but investors still expect a return on their investment, so betting on a highly volatile growth stock like Tesla could leave investors concerned about what the future holds. I'm going to buy the dip in Tesla shares, and so far it's paid off this year. According to a recent consensus, 21 out of 36 experts believe that Tesla stock is a buy, while 11 believe that it is a hold. For a sell, the average price target for Tesla stock in the upcoming year was $218.95 per share, while the firm's long-term projection was 564.24 cents per share in the following 5 years. Achieving this cost might not be too difficult given that Tesla's stock recently crossed the 200 mark. It's feasible that in the coming years, Tesla's stock price will rise much higher than 500. Make sure to watch this video through to the end to see the fascinating updates we have on Tesla. Now, let's get started right now. Hi everyone, happy to be back at Tesla tomorrow. Price reductions have been a major driver in Tesla's stock increase thus far this year. Following a notable increase in 2023, the EV manufacturer reduced the price of two of its best-selling models, the Model Y and Model 3, in European and Euro markets in January. With a 12-month forwards price-to-earnings ratio of 44.6, Tesla stock is no longer as cheap as it was at the beginning of the year. The carmaker's price is over twice as high as the 24.9 forwards PE for the Nasdaq 100. Given its top and bottom line growth rates, Tesla is unquestionably still an excellent investment. The fourth quarter's earnings per share, EPS, increased by 57 to 1.7 cents, and Tesla's management anticipates that production will grow at a compound annual growth rate of 50 over the long term, which could result in sustainable revenue and profit growth. However, not everyone is convinced that the year will go well for Tesla, so what will it take for the company to grow 4 times in the next 5 years, and what projects could it work on to spur this kind of growth? We'll talk more about those in a moment, but before we do that, remember to hit the like button, subscribe, and enable post notifications to stay updated on everything related to Tesla. Over the past 10 years, the value of Tesla stock has increased by 35%, whereas the returns on the Nasdaq 100 and S&P 500 index have been 348.9 and 187.6, respectively. This indicates that the value of the company's shares has decreased at a compound annual growth rate of 56.8%, which is an amazing return that hasn't always been smooth sailing. After the splits, Tesla's stock value saw a sharp drop until it reached new highs in November 2021 of $414.50 per share. This was due to changes in the macroeconomic environment. This occurred as a result of investors taking a riskier stance as a result of the U.S. Federal Reserve's more aggressive activities. Probably the most important factor to take into account when creating a long-term projection is Tesla's fundamentals. This includes a review of the demand for EVs around the globe, with a focus on regions that Tesla may be aiming to enter in the near future, as well as those where it is now present. Other important things to take into account are Tesla's growth in the energy sector, as well as its entry into robotics and artificial intelligence. Tesla's 4680 battery cells are another important development. By streamlining the production process, the organization is paving the way for future cost reductions. It creates things in minutes using massive casts instead of hours of stamping, and the long-awaited Tesla Cybertruck needs to be there. Welded correctly in order to go into production, the Ultimaker had originally thought of employing both LFP and conventional 2170 batteries for that vehicle, but ultimately chose to concentrate on using dry-coated 4680 cells. The main reason the Cybertruck hasn't reached mass manufacturing level is reportedly due to the unavailability of such cells, as Musk and Tesla visualize. The novel dry electrode technology will be used in the production of the new battery. Removing the wet elements of the process reduces the size of the battery and the plant. It also significantly lowers the energy required to make the batteries, and there are no hazardous chemicals that need to be recovered. Tesla is attempting to do away with as many cables as it can. It also resolutely declines to provide an overwhelming array of models and possibilities as part of that simplifying process, citing the fact that complexity drives up costs. The automaker revealed in January that it intended to invest $3.6 billion to expand its gigafactory in Nevada. This was disclosed by Tesla in a statement on its knowledge website that was subsequently shared on Twitter. It said that the company intends to grow its workforce and build 2 new factories, a 100 gigawatt-hour 4680 cell facility that can produce enough batteries annually to power 1.5 million light-duty vehicles, and its first volume semi-factory. Together with a number of other projects, Tesla is attempting to bring these to fruition. In a recent research note, Morgan Stanley stated that although there is still a risk associated with execution and a lack of clarity, Tesla's influence on the global battery market may not have been fully appreciated. Given the automaker's attempts to keep expanding in each of these areas, we may conclude that Tesla is much more than just a vehicle manufacturer. Tesla's devoted fan base is one of its main advantages over rivals. Tesla has maintained a devoted following, despite speculation that Elon Musk may lose his position of leadership. The vehicle firm outperformed all other automakers in terms of total brand loyalty and most enhanced loyalty, per a loyalty research conducted by SP Global Mobility. According to HP Global Mobility last year, Tesla's appeal to ethnic consumers improved customer loyalty, and the automaker was eligible for significant U.S. EV tax subsidies, which piqued interest once more. Moreover, Tesla was recognized with segment model loyalty awards for the Model E's luxury compact utility and the Model 3's luxury small car. The automaker has already taken home honors for having the most loyalty among owners of electric vehicles and the highest conquest percentage, a measure of how much a brand can lure a client away from another brand. Investors in Tesla are renowned for their devotion. Just 18% of American investors were positive on equities in the fourth quarter of last year. 68 investors were pessimistic. But earlier this year, only 48 investors were bearish and 35 were already bullish. Thus, young investors are now more likely to buy high risk. The opinions of high reward stocks, such as Tesla, have changed even more drastically. Compared to just 15 in the fourth quarter, around 40 now say they are bullish. According to statistics from SP Global, investors should carefully evaluate Tesla's rivals and what these businesses are doing to determine whether or not their cars will eventually eat up a piece of Tesla's party. In the first 9 months of 2022, 65% of U.S. sales of electric automobiles were made by Tesla vehicles. Due to its profitability, Tesla will depend less on outside funding sources like debt or equity dilution, making it less susceptible to rising interest rates and a downturn market. The price of both forms of money has increased due to the stock market. Along with a host of additional benefits that came with being the leader of the electric vehicle (EV) market, Tesla's success in 2022 was primarily due to inventory shortages among the traditional manufacturers and buyers returning to the market sooner than the typical buyer of other brands. While other companies continue to operate on their current internal combustion-based platforms with electric options, Tesla enjoys the advantage of pure growth in the industry, even if it still has to compete with huge traditional automakers that are making the switch to electric vehicles. In what 5 years do you anticipate the value of Tesla stock will rise to? Please share your thoughts with us below, and don't forget to rate Tesla. Please click on the following video to see more about what Tesla has been up to in the previous few days. Talk to you.